Warren Buffett made nearly $25 billion during the 2008 crisis, and this wasn't by chance. It all goes back to his saying to be greedy when others are fearful and be fearful when others are greedy. So how does this relate to you and today? Well, during the coronavirus, there is a lot of fear in the market. The market was down nearly 30% at one point in March from all-time highs earlier in the year. And while it has bounced back a little bit since then, who's not to say it'll drop back down again because of all of the uncertainty in the market? So this is the moment that Warren Buffett has been waiting for years. His company has not made any major investments in the last 4 years. And he has $128 billion just sitting there waiting to be invested. So today what I'm going to do is I'm going to go over how Warren Buffett made so much money from 2 simple investments during the 2008 crisis. Then I'm going to go over how this applies to today and during the coronavirus. And finally, I'm going to go over what this means to you as an investor. So make sure you stick around until the end so you can see how it applies to you. What's up everybody, Michael here. Welcome back to another video. Before we get started today, please be sure to like the video down below and leave a comment with your takeaways and thoughts on today's video. So anyways, let's get started and talk about what Warren Buffett did by making 2 simple investments in 2008 that gave him a return of $25 billion. So what Warren Buffett did in 2008 was during the financial crisis, he helped invest money into 2 different banks. He invested $5 billion into Goldman Sachs, who was in desperate need of capital, and he did the same thing for Bank of America. So, with Bank of America, what he did is he gave them $5 billion and invested that into the company. He was guaranteed an annual return with dividends of 6% annually. But what was even more important than that 6% return was that he was given the right, which is called a warrant, to buy 700,000 shares of Bank of America at $7.14 per share anytime within the next 10 years. So he did that in 2011, and it was available until 2021, which is still 1 year from now. Right now, Bank of America stock is $24 per share, and he could still buy shares of it at $7.14. So by doing this and giving money to the bank at this time, he helped save the bank from bankruptcy, and he also guaranteed that he would make a significant return on his money if the company was to stay afloat, which it did. So now whenever he buys a share for $7.14, he could sell it right away for $24. And that is how he made close to $20 billion from simply investing $5 billion in 2011. With Goldman Sachs, he did the similar thing. They were in need of capital. He invested $5 billion in order to save the company. And by doing this, within 3 years' time, he got a return. He profited $3.7 billion. And he was also received warrants, which is the right to buy shares of a company at a lower price. He received warrants to buy shares of Goldman Sachs for up to $5 billion at $115 per share. And right now, Goldman Sachs is significantly higher than that as well. In a letter to shareholders in the beginning of 2019, Warren Buffett says that he's looking to make an elephant-sized investment. He's looking to permanently own a company that is huge. So right now is a great opportunity to do this because he has $128 billion in cash sitting with his company. So what is he looking for with a company to invest in? Well, he wants a solid management team, attractive returns, strong upside potential, and at a reasonable price. He is not willing to pay more than a company is worth. He's done this multiple times in the past where companies have outbid him, even though he could have definitely spent more money, because he did not want to overpay for a business. So for Warren Buffett, this means it is a great time for him to put his $128 billion to use and acquire a company. So what companies can he acquire? He could basically acquire any company in the world. 99% of the companies in the world are worth less than $128 billion. So anyways, how does this relate to you and investing today? Well, right now, during this time, a lot of companies are at a discounted price from what they were earlier in the year. And while things have gone back up recently, who's not to say that they'll drop back down again? Because if the coronavirus drags out, we could be, social distancing, isolating, quarantining for the next 6 months. So if it extends and it drags out even longer, stock prices will probably drop back down again, especially if the economy can't return to normal and businesses are not generating revenue to stay in business. If companies are going out of business, stock market is going to drop again. So depending on what happens with that, right now is still a great time to invest. Even if you think the stock market's going to recover, still the companies are at a discounted price than what they were earlier in the year. So anyways, it's a great time to invest in stocks that you think will be around 10, 20 years from now. But another thing to look at is to invest in Warren Buffett's company, Berkshire Hathaway. Right now, it's around $275,000. You're like, no one can invest in that. And yeah, I get it. Like, no one's going to invest in one share of a company for $275,000. And makes sense. But using apps like Robinhood and a bunch of other brokerage apps, you can buy fractional shares. So you could buy fractional shares of Berkshire Hathaway using Robinhood. So if you have $100, you can invest it in Berkshire Hathaway. Why would you want to do that? Well, right now, they're at a 1.2 price to book ratio. And what does this mean? Well, essentially, it means that it's a very cheap company to buy right now. Typically, value investors who are looking for good deals think anything under 3 is a pretty good investment. And with Warren Buffett's company, typically it's normally around 1.7, but right now it's only at 1.2 because of everything that's happened, the drop in the stock market. So investing in his company, whether you buy an entire share or if you buy fractional shares using apps like Robinhood, it's a great investment right now, especially if he is going to be making this sort of large acquisition like he has been talking about. And let me tell you, he's going to make some move. He's not just going to keep $128 billion in cash. He's going to want to invest that in something, whether that's going to be investing in equity in more stocks, or if it's going to be to purchase a massive company, which is what he said he wanted to do in his letter to shareholders. So anyways, whether you want to invest in individual stocks or if you want to invest in Warren Buffett's company, Berkshire Hathaway, you could do all of those things because right now is a great buying opportunity to get into the stock market in general, and it could be even better to get into Warren Buffett's company because of the major moves he is looking to make with all of the cash he has on hand. So anyways, that's all I got for you guys in today's video. Please be sure to like the video down below, leave a comment with your takeaways and thoughts on what Warren Buffett's doing, what companies you think he might buy, and just your takeaways from today's video in general. Please subscribe down below. Thank you so much for watching, and I'll see you guys next time.